Big life changes bring big financial questions. Whether you're navigating a career shift, having a baby, or adjusting to life after divorce, this podcast is a safe space for real, practical financial information. I'm your host, Roland McIntyre, owner of Mountaintop Wealth. I'm a certified financial planner professional with over a decade of experience in the financial industry. In each episode, I will help you navigate life's money peaks and pivots by skipping the judgment and focusing on solutions to turn your uncertainty into confidence. No jargon, no fluff, and most importantly, no shame. Your climb starts here. All right, welcome back to Money Peaks and Pivots, and I am so glad you are listening and watching today. We are going to talk about a fun topic: taxes. Yes, taxes are fun, especially to me, especially the opportunity to see what is coming in, what's going out, how much we are going to owe to Uncle Sam, and some of the things around it. I think it's a big opportunity for financial literacy, not only for yourself, but your entire family, because at some point your children are going to have to pay taxes. You and your spouse, if you have one, you have that combined income. How do you choose to file? How does that affect your tax situation? It gives so much of a window into your financial life, and it gives you the opportunity to have those money conversations, which are critical in any relationship, even if you're single. Just knowing your financial situation is so important. So, tax time is a money time. It is a financial opportunity to get better educated and have a better understanding of your money. So, what we're going to do today is really just talk about some things on a surface level. Don't worry, I'm not going to throw too many tax forms or documents and things at you. But what we want to talk about are some things that can really, really help you get your taxes done efficiently and potentially save you some money. So that's what we want to do: save you some money. We want to make sure you can do this with less stress, less hassle, and a different mindset when you actually go into doing this. So I like to start out, I want to start out with some conversations that I have with people when it's tax time, when I talk with my clients, when I talk with family members, when it is time to have those conversations about taxes. One of the first things people do is drop their head, start mumbling something about the IRS is, and how they are this or that, whatever case may be. And that's totally fine, because the IRS, is not, I wouldn't say anybody's friend here with when we start talking about taxes, but these conversations can be looked at differently. And I want you to try to approach it differently going into the next time you start to do your taxes, rather than just hey, it's going to be a difficult situation, but what opportunities lie ahead for you? What information can I learn when I do my taxes? And how can I make this better for the next year? So I think that can be a very important thing. One of the first things you really think about is organizing those documents and having the right paperwork. The first thing that people really start to know when it's tax time is when they get something in the mail or they get an email, and they open that letter up or that envelope up, and they see what's called a W-2. That W-2 is just showing income from your job. And that is just the information of what did you make that prior year. So whatever year it was, it's just showing that information. So, and it'll show the income that you made, any taxes that you withheld, uh, and it'll show some other information like, hey, did you pay into a retirement plan? What about a healthcare plan? What about a health savings opportunity there? Are you in a state that has state income taxes? Did you withhold any money to that state income tax? That W-2 tells you all of that information. So that is one of those income documents that is very important and most common for people when they're having to file their taxes is a W-2 form. That is one of the documents that you're going to want to have. If you are at a job, and you are paid on an hourly or salary basis, you're likely going to receive a W-2. So that is one of the forms I want you to keep in mind. Now, another one, and because we're in the, you know, we're post pandemic here, everybody seems to have a side hustle these days. Another form is what's called for contract work or gig work. And this work is for the Door Dashers, the Uber drivers, the people who are doing some type of online online work where they are doing some type of transactions. You're going to hear some, or you're going to see a form called a 1099 NEC or a 1099K, 1099 MISC, or which is a MIC, miscellaneous. All these are income forms. It's telling you the same thing that W-2 is. It's just saying that you did different type of work. You didn't do hourly work. You didn't do salary work. You did work on a gig type level or a freelance level is usually the case. That's all it is. Make sure if you're going to file your taxes that you have all of those documents for the entire year, all of your income. You're not sure if something is taxable or not, bring it in. The person who is doing your taxes, or if you're doing your taxes yourself, you're going to have the opportunity to review that. The main thing we're talking about right now is getting the documents in order and having everything organized and ready to go. Once you get all the income that you had for that year in order, and far as all the different ways you made money or received money. So whether that was from the government, we didn't talk about Social Security. People are retired. People have Social Security disability. You still receive what's called a Social Security statement, and that counts as income. That's one of the things you want to have with you when you file your taxes, whether you're doing that online or you're doing that in person. So make sure that you have all of your income sources. If you have retired and you have a pension from your job, that is another document that you want to have. That's an income document. It may be listed as a 1099-R. That R usually stands for retirement. It's a good way to remember that. If you see 1099-R, that means that money that you've received is likely from some type of retirement payment, whether that's from a retirement account like a 401k, 403b, or it could be from that pension that we talked about earlier, or some type of annuity. I know these words may sound new to you, but these are ways that you're receiving money and you're just tracking all that income that came in the house. Put them all together right now. You and your tax preparer, or you doing your individual um, understanding and education for yourself can be done. But right now, let's just get all the income in order and just make sure we have all of those income documents. The next thing that you want to do is really and you could really do this first, honestly, is to make sure you have any other information that is going to verify you. So if you're going to get your taxes done, a lot of places are going to want to see that driver's license, social security card to make sure you are who you say you are. Because in these times, with identity theft running rampant, there is a need for people to make sure you are not filing fraudulent returns. So make sure you have your actual driver's license, your actual social security card. If you don't have those things, this is a reminder to get those things in order and be prepared to do those things. That really helps. That really makes things a lot easier for you when you go to meet with someone to have your taxes done. Why isn't that the number one thing? Because everyone doesn't do their taxes by a tax preparer where they go meet someone in person. Some people do it online and they choose not to, but then they go to do their taxes online. Things get a little weird, and then maybe they need to go see someone, and then they just take the income documents, and then they forget about the verifying information, photo ID, social security cards. Yes, it's on the W-2, but that doesn't mean that you are that person on the W-2. So bringing the photo ID and the social security card are important. And speaking of identity theft, a lot of people's tax returns get pushed back, or the IRS won't accept them because they don't have what's called a IP pin. IP pin is a identity protection pin. That identity protection pin is one of those fraud protection things that you can get from the IRS at irs.gov. And you may have been assigned one if someone has tried to file a tax return under your name and they were not supposed to. So the IRS may issue you this. They send that letter to you usually in January, if you do have one. So if you receive any letter from the IRS, you want to bring that to any tax appointment that you're having with someone, or if when you're organizing your documents, make sure you have that separate side there too to have tax documents put aside. But that IP pin is usually a 6-digit pin number that you have to put in with your tax return so that the IRS can know it's you. It's that extra level. We talked about the social security number. We talked about the photo ID. And then that next level of security protection is that IP pin. So if you've been someone that has had to look at your credit score go down because someone has messed up your credit because they have fraudulently did transactions on your account and you've had to get those things taken off and you've been battling with that. Another thing you may want to do is check with your make sure your taxes haven't been actually affected and someone's not trying to file taxes in your name. So that may be something that you really want to do. So having that IP pin is important as well. So once you get those verification things out of the way, the income things out of the way, now let's talk about some of the fun stuff. And I think this is where it really comes in. Some of these deduction opportunities, ways you can save you some money. And one of the, of course, now I'm biased. I am. The first one I'm going to mention, I'm a financial advisor. We're going to talk about saving for retirement. And when you save for retirement, that is a way for you to actually lower your taxable income. So if you're contributing to a traditional 401k, a traditional 403b, you could be actually lowering your taxable income. This is one of the ways you can get a deduction on your tax return. And I'll leave it there. I won't go too deep on that. We can have a conversation that we can go a little deeper on that on another day. But usually, when we're having conversations about traditional IRAs and uh, Roth IRAs, this is one of those differences where you can get that tax deduction up front. And I'll leave that one alone there. Another thing that people don't realize is even if you're contributing to a Roth and you have so you say you're younger and you're just starting out, or maybe you're retired and you're retired, but you're semi-retired, but you're still working and you're still putting some money back aside. There is something called a retirement savers credit. So even if you're putting money in a Roth 401k or a Roth IRA, you could still get a tax credit for making those contributions. And that's an after tax type of account when you're talking about Roth 401k and a Roth IRA. So that retirement savings credit is another thing that can help you. Another one that people don't think about is the student loan deduction, the student loan interest deduction. So if you've been paying student loans or you have supposed to been paying student loans, you need to be checking with those student loan servicer sites. So whether that's Nelnet, Navient, um, there's so many, Mahila, all of these different companies, whomever is sending you that bill, that email for us to make a payment, and maybe you've been postponing it, whatever the case may be, there's interest accruing. And if you have been making some payments, even if those payments have been lower after the pandemic, there's actually interest accruing, and that interest is actually available for deduction. And it's usually about $2,000, $2,500, if I'm not mistaken. Uh, so you are going to really want to look at seeing if that is a deduction that applies to you. It's on you want to go sign into those websites. You can call as well to these loan servicers and ask for a 1098 form. That 1098 form is going to have the information for your student loan deduction. So you don't even need to remember 1098 form. Don't worry about that. you're looking for your tax documents when you go onto the site. You'll go onto the website, look into your profile or look into the My Account section, and then look for documents. It'll be a separate section, or it'll say statements. You want to look for tax statements or tax documents. Those are your keywords. You get a tax statement, tax document, that can only help you. Make sure you bring that to that tax meeting or when you're finna file your taxes. That's one of those deductions that you can get, and that'll be very beneficial. Another education related one is, hey, if you have went to school, there's two big ones. I won't get too deep into them, but you want to bring in, if you've went to school, whether it's your first 4 years or you've went to school later in life, or you're going back to get some type of trade done, you're going back to nursing school, whatever the case may be. There's two credits. One is called the lifetime learning credit. That lifetime learning credit can get you a credit of up to $2,000. And that credit is available for people. It says lifetime. So it doesn't matter if you're not in your 20s. So if you're a little older, if you're a little seasoned, that's okay. You can still potentially benefit from that credit if you have education eligible expenses. Another one regarding that, which is a little bit better, is the American Opportunity tax credit, and that's usually for uh, when you're going to school for undergrad, and that credit is a little bit larger, and that credit can be very beneficial for either one of these credits. A good form to have is what's called a 1098T. Your school usually has this. Again, just like when we talked about the student loans, go and look at your My Account section so you can find that information. That My Account or your um, profile section should again have the word tax documents or tax statement. Print that PDF off and bring that with you. Save it to your files, put it somewhere where you can make sure all of these documents are organized. Once we start having all of these documents organized, it makes it so much easier to make sure we get credit for every tax deduction possible. Another one, just by spending money and saving money through what's called a health savings account, you could potentially be building generational wealth. And that can be a whole nother episode just on health savings accounts. If you're interested in that, let me know. But with health savings accounts, there's going to be a way for you to save money, not only just from your payroll, from money coming out of your check and you putting money in this savings account that gives you a tax deduction, but also you can put money in there as well, even if you haven't had any money coming out directly from your paycheck into these health savings accounts. And when you put that money into those accounts, that money is growing tax deferred. That means no taxes on that money, and you can invest that money while it's in that savings account. So, and it will grow tax deferred. So that means as the money's growing, you don't have to pay any taxes on it. So you get a tax deduction for putting it in. You don't have to pay taxes on it while it grows. And if when you do decide to take that money out, that money is tax free. If you use it for the eligible expenses that a health savings account are related to. So many people have all types of prescriptions and doctor visits and all of those different things. Health savings accounts are a great way to put money aside and grow your money specifically for those reasons. Health costs are only going up. And guess what? As you get older, those health costs increase. It's a great idea to put some money aside for that and get a tax deduction while you're doing it. So think about that one there too. Okay. Another one that people think about first when they talk about tax savings is the charitable contributions, that money we give to the church, those tithes and offerings, those contributions for the building fund, those monies that we give to all types of charities, whether it's uh, a nonprofit organization that you deeply care about. These contributions can be tax deductible, and the key word is can be tax deductible. They're not always deductible for you. Part of that reason why is because most people do not itemize. And a charitable contribution or money paid to a charity or church, uh, that church may be a 501c3. It's nothing wrong with the church. It's nothing that the church or the charity is doing wrong. It's just that you may not have enough itemized expenses to get that deduction. So you may give $5,000, but as a person who has a standard deduction that's much larger, that's still not enough to actually qualify you for an itemized deduction. You can choose to do the itemized deduction, but that wasn't necessarily be in your best interest as far as your return. So there's something called a standard tax deduction that everyone gets. That standard deduction is usually somewhere in between right now. So last year for 2024, it was $14,600 for a single individual. It gradually goes up for head of household and then also married filing jointly. So with those actual standard deductions, if you don't have itemized deductions that's higher than those, then it's usually not worth it to actually take that charitable deduction. You also have things like your mortgage interest. Same thing applies. This is what it would be called an itemized deduction. Now you can add up the property taxes, the mortgage interest, and the charitable deductions to see if that is enough to be more than your standard deduction. And if it is, you should itemize. Go for it. Get those deductions. But with property taxes, mortgage interest, the charitable deductions, there's even medical expenses above a certain AGI amount, which is a 7.5%, you can actually include far as getting itemized. But none of these things actually, if these things are not above a certain threshold, then you don't get a deduction for it. Still give to those charities, still give to those nonprofits, still give to those churches, but that doesn't necessarily mean you're going to get a tax deduction. Hang on to those documents though, because that's not something that maybe you want to determine. Bring it to that tax meeting or when you have your organize your documents, it's good to have it just in case. Some years fluctuate and there's some things and some strategies you can do to make that happen. And I'll just give a hint at one. So one year you may hold back some of those charitable contributions and some other things so that the following year you can't itemize. So it may be a every other year type of thing where you every 2 years you itemize and then on the other year you don't itemize. So you bunch some of those expenses so that you know that in certain years you're going to have the ability to actually itemize your return and that can save you a little bit of money rather than spreading it out evenly where you don't get any of those where you don't get that higher potential deduction. But those are just some of the tax items that you can do. And before I wrap up, I do want to say something for the small business owners and entrepreneurs out there. Keep track of those documents, y'all. Keep track of that bookkeeping. This is where that accountant is very helpful for you. No one wants to go back in the days where you see the TV shows, any old TV show, when you see them doing the taxes, they got a typewriter and the receipts, and they have the little hat on. It's the little clear visor on, and they're tapping on everything, and it's receipts everywhere. Don't be that guy or girl. Make sure you have some organization to those documents. I know some people try to do that on paper. Look, you can track some of this stuff. There's apps out here that allow you to do it. You can utilize some QuickBooks, things of that nature. That makes things a lot smoother for you to track throughout the year. And it will actually simplify things for you so you can get a better idea of what you're doing and spending on your business. Remember, when we started this conversation, taxes, when we're talking about taxes, I want you to change that mindset. This is not about you having to pay Uncle Sam. This is about you understanding where your money is going, how, and educating yourself on the tax system so you can benefit more and more from year to year to year. So getting better educated, getting better organized will help you with this process and actually help make taxes a lot easier for you. These apps for as far as tracking your mileage, they're so you can literally search some out there that will literally track your mileage for you. You can swipe certain directions that tells, hey, this is personal. Swipe the other way, this is business, and it's handled for you. And then when it comes tax time, it's already there for you. That's the same thing goes for you Uber drivers and DoorDash drivers and Lyft drivers. Same thing. You're driving back and forth and doing all this driving. Don't just come in with just your income. You want to have some of those expenses that you've had doing that work so you can get the deductions. Some people just bring in the income and that's where they mess up. So make sure, whether you are a gig worker or small business owner, we call those people self-employed people. These are self-employed deductions that are available to you. Track those expenses so you can actually get those deductions. Now, for you W-2 workers, salaried workers, these deductions don't apply to you. Unfortunately, they're not available in the tax code for salaried workers or hourly workers. So that is just part of the tax code. Don't be mad at me. Don't be mad at Uncle Sam. Maybe blame Congress because they're the one that writes the laws. So maybe that's who you want to be concerned or be a little mad at. That's who you can shake your fist at. The for you, I'll give you one more thing. W-2 and salaried people, hourly people. Make sure you're withholding enough on your taxes. There is something out there on the IRS called a withholding calculator that you can go out and do yourself, and it will allow you to get a what's called a W-4, and it will calculate everything based off of your paycheck and all of the income that you have in advance of tax season. And you can give that to your HR department and tell them, hey, this is what I would want withheld from my paycheck so that I make sure I don't owe any taxes or I owe less in taxes each year. These are little things that can help you save you big time. Having a withholding amount from your Social Security, if you're at that age, or having withholding from your pension, you can withhold money from these accounts so that you don't owe at tax time. So keep all of these things in mind. You want to get organized, and then you can start educating yourself each year at tax time. This is not a time to be mad at the IRS. This is a time to start outsmarting not the IRS, but outsmarting other people when it comes to being savvy about your finances and be actually putting yourself ahead of the game so you can actually benefit and build and grow wealth. So hopefully this has been helpful for you. I'll have some links to the show notes where you can find some of this information and truly enjoy it. Let's get smart with taxes, and I'll see y'all next time on Peaks and Pivots.